So it doesn't mean, it will not change, the global story for the market simply because when you look at the polls, when you look at the probability, to see Donald Trump winning the elections, the market has already priced, this scenario. So seeing Biden, pull out of the White House race as first a surprise, of course, but I think it will not change, the global picture of this U.S. presidential election. The Republican camp has already, a huge advance in the polls, and clearly this is something that will not have a massive impact on the markets. So it will depend on, what the Democrats will decide in terms of candidate. It will depend on how this campaign will turn out in September. But definitely, in my opinion, the market is not, surprised by this, a new outcome by this surprise.
Indeed, and as you say, the GOP and Donald Trump remain the favourite right now to win the race in November. Of course, investors are going to be actively looking at the path and progress of whoever the Democrats put forward to see whether or not it will mount a viable challenge when it comes to the race to the White House. But Mabrouk, let's just focus in on some other issues here. Of course, we did see the S&P technology sector falling significantly last week because of this ongoing rotation that we see from big tech and chips into the small caps. Do you think that rotation continues? And is there anything that can stem the declines that we're seeing in big tech right now?
Well, this is, I think, the key question of the moment, because when it comes, to this rotation story from the tech to the small cap, it is clearly related to one factor: the interest rates. All this rotation story is linked to the probability to see the Fed cutting rates in September. So we start to see some doubts from the market that the Fed could deliver in September. So this is why, we have, this decline in the tech sector. In the same time, what could explain, this increase in the small cap is clearly, the fact that growth has not, completely disappeared from the landscape in the U.S. It's the opposite. We will have, this week, the Q2, the second quarter growth rate for the U.S., and the growth rate is expected to accelerate a bit compared to what we had in the first quarter. So in this context, when we have a fantastic performance of the Nasdaq, when we look at the performance of the Nasdaq year to date, it's more than 20%. Clearly, investors, they are taking some profit. I'm not worried about, this clearly decline in performance of the tech sector that we have seen this week, simply because, this story will not collapse, will not disappear in a week or in a month. So this is a long-term trend, and of course we can see some, let's say, decline in prices, which is, I think, which reflect, in my opinion, some entry points and some opportunities for some investors who have not, been able to buy, this market. And then clearly, when it comes to the small cap, of course, we continue to see, the Fed delivering a first rate cut in September, because we do think again that this is the right moment, and the economic conditions are there for the Fed to start to introduce an inflection in their monetary policy. So when you combine, all this environment, lower interest rates in the coming weeks, plus, a steady growth, continuing in the U.S., plus, some profit taking in the tech sector, this explains this rotation. In my opinion, we need, to see growth continuing, to be quite strong in the U.S., to see this small cap sector performing, which is not our scenario by the year end. And this is maybe the risk, to see some volatility in the equity market and in this rotation thematic by the year end as well.